Now, internationally, we have the International Federation of Accountants, or the IFAC. Now, this is a worldwide organization with members from over 100 countries. And as I told you, even the AICPA is a member of the International Federation of Accountants. Now, the International Federation of Accountants has this board which we call the International Auditing and Assurance Standards Board. This board comes out with ISAs, or International Standards in Auditing. Now, these international standards do not override the audit standards of its members. So you have the ISA standards which certainly do not override the ASBs or the SAS followed in the US. But these standards serve as guidance to develop consistent worldwide professional standards. But if a country does not have its own audit standards, it can adopt the international standards of auditing. Now, that's for audit standards. For ethics, the International Federation of Accountants has another board which we call the IESBA, or International Ethics Standard Board for Accountants. Now, the IESBA code is a little more lenient than the AICPA code, and certainly much more lenient than the SOX or the SEC rules. So whenever independence is concerned, the IESBA has fewer outright prohibitions. So let's say there is a threat to independence. The IESBA code prescribes safeguards that can either eliminate the threat to independence or reduce the threat to an acceptable level.
On page 37, we're looking at international standards. Highlight IFAC, that's the International Federation of Accountants, which is a worldwide association of over 175 members and associates in over 130 countries and jurisdictions. One of the members of IFAC is the AICPA. And right there, IFAC has a couple of key boards, right? IAASB, which develops, right, audit standards. And the IESBA, which develops the ethics code. So IAASB is highlight the International Auditing and Assurance Standards Board, which develops and issues highlight international standards on auditings, or ISAs. So from a US standpoint, right, AICPA issues SAS, which is the AU-C codification. The IAASB also issues highlight international standards on quality control. And from a US perspective, right, the AICPA issues SQCS, which are the quality control standards for CPAs. Now, as of 2017, underline 124 countries either used clarified ISAs or committed to use them in the near future. This includes the US, where the AICPA converged their statements on auditing standards SAS with ISAs further to the Clarity Project. And the AICPA's SAS after the Clarity Project became the AU-C codification. Turn to page 38 and underline clarified ISAs. And right there, compare these with AU-C in the Audit 0 appendix. And if you compare, right, your takeaway will be that AICPA's SAS, that's the AU-C codification, has been converged with ISAs. You would see similar section numbers. On page 39, highlight the International Ethics Standards Boards for Accountants, that's the IESBA, who develop, highlight the IESBA Code of Ethics for Professional Accountants. From a US standpoint, right, the AICPA has the Code of Professional Conduct, the ET codification. Now underline, the IESBA code uses the conceptual framework approach to evaluate ethical conduct, whereas underline, the AICPA only requires members to use the conceptual framework approach if the rules do not address their situation. Now, the IESBA code has three parts: Part A, Part B, and Part C. Part A applies to circle all professional accountants. And you could compare this with AICPA code, where Part 1, 2, and 3 all apply. The IESBA code Part B applies to professional accountants in underline public practice. And from a AICPA code perspective, this is Part 1 only. And Part C of the IESBA code applies to professional accountants in underline business. Comparing it to the AICPA code, this is Part 2 only. Highlight conceptual framework approach to independence. This is as per the IESBA code. So auditor should be independent, highlight both in mind and appearance. So that's both in fact and appearance. So here they're saying both in mind and appearance. Similar meaning. The conceptual framework should be applied to identify, underline threats to independence. Then the significance of the threats identified should be evaluated. And then the member should apply, underline safeguards as necessary to eliminate or at least mitigate those threats. Note that highlight the IESBA code has fewer outright prohibitions vis-a-vis the AICPA code. It's actually a little bit more lenient, allows the members to take a call using the conceptual framework approach. And on page 40, the last page of Audit 1, we're looking at the summary of independent standards. And we got a table here which compares independent standards which apply when CPAs provide services to non-issuers. So that's the AICPA Code of Professional Conduct. Versus the independent standards which apply when CPAs provide services to issuers, where we not only have the AICPA code, but PCAOB, SOX, and SEC rules also apply. And we compare this with the independent standards as per the IESBA code. Now, when we talk about performance of non-attest services for an audit or attest client, so that's about auditing plus non-attest services to the same client. Now, we learned under impairment of independence via business relationships that this could be trouble. So the US rules for non-issuers as well as for issuers specifically prohibit a lot of non-attest services to an audit attest client. But when you look at the IESBA code, it's a little bit more lenient. It allows a lot of these non-attest services to an audit or attest client provided the member has justified enough safeguards. So basically, it's encouraging members to use the conceptual framework approach. And if the member thinks that there are safeguards which eliminate or mitigate the threats, it's permitted to provide certain non-attest services along with auditing or attest services. So put a box around all those permitted with safeguards under IFAC. And right there, more lenient than US rules. As far as tax services are concerned for an audit or a test client, they are highlighted permitted, permitted, and permitted. So they're permitted under US rules as well as international rules. However, when providing tax services to an audit or a test client, if that client is an issuer, then the tax services need to be pre-approved by the audit committee and disclosed to the SEC. And even on top of that, a couple of restrictions apply. So highlight the two crosses there. So the public accounting firm cannot be providing tax services related to confidential or aggressive tax transactions if it is an issuer, audit, or a test client. Again, the public accounting firm cannot provide tax services to corporate officers of client or the immediate family members if the client is an issuer, audit, or attest client.